Good afternoon, everyone. Welcome to yet another episode of Real Estate Recess. I'm your hostess with the mostest, Jennifer Schurter, and today I'm coming to you on location at United Wholesale Mortgage's headquarters in the Detroit, Michigan area. And today I have a very special guest with me. Welcome, Riley Anderson of Freestone Mortgage. We are here together for this really awesome experience of getting to see the UWM campus.
Yeah.
And as a real estate agent, experiencing this has been really, really awe-inspiring in a lot of ways, especially when I think about my clients and what it takes to make a mortgage go from start to finish.
Yeah.
And this is where the magic happens.
This is where the magic happens.
Yeah.
Yeah. It's really fun to be in the belly of the beast, getting out here. You get to come out, sharpen your skills, network with other agents and brokers from around the nation. It's been really pivotal in growing our business, my business personally, and seeing the fruit from it. So it's been fun to be able to bring groups back out here to learn, to just see it. And there's rumors of it, what it looks like, how big it is out west. But to get to come and see it, it's a really different beast and fun to see.
It's awesome. So you're watching this on Thursday, May 1st. So we're actually pre-recording this early because tomorrow at that time we will be on an airplane. So today is April 30th. So we're going to bring this to you on May 1st. So thanks for being here. And I've just got one request while you're out here watching, and that is if you wouldn't mind subscribing to my channel, Living in Portland Suburbs. If you like to keep with up-to-date information about what's happening in the real estate world in our local area, then do subscribe and hit the bell to be notified so that you don't miss a beat on anything, so you can stay in the know. So one thing I think that we really should talk about, because you're here in the room and we're here in this great location right now, is the market. What in the world is happening in the real estate market in regards to interest rates? And there's been a lot of big economic news that's shaking things up right now. We've got the Trump tariffs and everything going on with that. This talks of the Fed. So why don't you, from your perspective, tell the people out there watching exactly what you see and your take on how that's affecting the world of real estate right now?
Yeah. Well, the past 30 days have been volatile, to say the least. We got tariff news, which spooked the markets, stock market and bond market alike. And then we've also been receiving, as of this week, specifically yesterday on April 30th, pending home sales were estimated to be at 1%. We're surprisingly surprised to see them come in at 6.1%.
Yes.
So we've been getting some positive economic data in lieu of all the negative tariff news and policy changes.
And we have some info for that too. So what you'll see here, this is from marketwatch.com, the economic, what is it called? The U.S. economic calendar. So we're going to review information for the 30th because you're watching this. We're presenting information from real time today, which is the 30th, since this is a pre-recorded episode. But this bottom 10 a.m. pending home sales, is that the graph, the information you're referring to?
Yeah.
Okay.
So investors were excited to see that, and it actually, kicked up some appetite for investors to purchase bonds. Rates trickled down a little bit today with the good news coming in. So it's been fun to see and ride the wave of volatile rates, pre-approvals moving on interest rates, and getting to walk people through that. If we knew where they were going or where they would be in 2 weeks, I would be on a beach, not working, respectfully.
You mean you don't have a crystal ball at your disposal?
No, and it'd be easy to say,
gosh,
rates are about to come down, and we like to be careful with Freestone Mortgage, giving market predictions. We like to interpret the data and try to position our clients to be effective, to make long-term decisions in a volatile market.
And I think that's a really smart position to take too, because even as a realtor, there's so much misinformation out there around interest rates and around just how people are presenting that conversation, because consumers, the folks that we're talking to right now, they're antsy about, well, when are the rates going to come down? They experience those historic low rates, and just, maybe they missed the opportunity and they're kicking themselves. So I see a lot of people, unfortunately, mortgage brokers or lenders and real estate agents alike, saying rates are going to come down. Rates are coming down this year. And I'm like, well, how do you know? I mean, do you have the magic 8 ball that's like, they're coming down in 90 days? I speak to that, if you will, because I don't I don't see anybody being able to predict anything. Nobody is saying we're going to do this and it's for sure. It's a guarantee of anything.
100%. And I think your inputs of where you're gathering information from is really important as well. If we just read the top Google article every time, it'd be easy to get swayed or misled. Yes.
The headlines are misleading. You have to, as they used to say in the media, the print business, you got to read beyond the fold.
Yes.
You can't just read the headline. You got to actually get to the meat and potatoes of the article, because they're trying to get engagement and clicks. And so they have that misleading headline, and that's not the news. The headline is not the news.
Yeah. And then the other one is staying in your lane of, if you work in capital markets and that's your decision to make, managing hedges, trades, and servicing book, then you have probably access to different information, or you can make those decisions quicker. Being lower down on the decision-making process of rates, it's been really good to just be the interpreter of what's going on, arming people with the information and allowing them to come to a decision together as being the advocate. Selling that you should wait 15 to 30 days for lower rates can be a slippery game to managing realtor partnerships of, if they're hot to trot and ready to go and can afford it, we know we're going to refinance them down the road. Putting a timetable to it is kind of when you get into the danger zone we found of, then I'm going to call you in exactly 6 months. It's like, well, it's not fair to say in a volatile market like this, and it's not setting up your clients to be the trustworthy advisor.
100%.
Is a separator. So going back to what you said.
So this pending home sale data on this economic calendar that we mentioned, that's still on the screen right here. We have this pending home sales. So on the left, it says 6.1%, and on the right, it says 1%. So what is that shift? What was that we saw, that's the 1 to 6.1%?
Yeah, well, I would like to note that this is trailing data as well. So this is for March of 2025. February was a favorable month for taking locks. We operate in 30-day periods. So seeing the home sales close and record in March, it's really an indicator of what was going on in February. So that's another thing we like to read into is kind of what we were just saying on the surface level. If you read the headline, it looks like today for April, this is the data, when really it's March data.
Trailing.
If we dig in a little more, it's really February data of when we got under contract, locked the loan. So that's when it closes 30 days later. So
well, and that's interesting because our RMLS market action report for the Portland metro region, what's interesting, a correlation with this market data, which is why I'm connecting these dots. In between February and March of this year, we saw a 38% increase in home listings. So new listings hitting the market in the Portland metro region. In addition to that, the other piece is that 33%, or there was a 33% increase in pending sales between February and March. There was an increase of that much. So that's the data that we received in April, which again is trailing. So it's going back, looking, kind of taking a rearview mirror look at that. But really interesting how there's that correlation between just the increase in activity on both the listing and the pending sales side. And a lot of times sellers become buyers. 100%. You sell your house, and then you're likely going to also purchase something. So it's interesting to see. So now we just got to see what that March data is like. March and April, like what the difference is between the two.
For sure. And they're expecting and projecting a hit. You can see that baked into the rate sheets now. If we take a peek at interest rates, we got a little bit of improvement today. But the tariff news is less than 45 days old. The market's still digesting it. It seems like we're getting different stories every couple of days on how they're going to proceed with these taxes and tariffs. So again, we're riding the roller coaster together, but trying to act first, call first with the data, the news. The interest rate has changed that I quoted you yesterday or the day before, and you said it better, digging into the meat and bones.
The meat and potatoes. We're in the Midwest. I think people could appreciate that here.
100%.
Yes.
100%.
Yes, of course. So you mentioned the Trump tariffs. What is your take on that as it relates to what's happening in the mortgage world right now? What has that done? Because we know that the mortgage rates that a consumer gets when they go to apply for a mortgage or a car loan or consumer debt that they're going to access. How do you see, because that's a top-down piece, because the mortgage rates are down here and there's a whole bunch of pieces of trickling down that have to come out and shake out to the rates people see at the bottom where we're at in the consumer world. So what are you seeing up here on the Trump tariff side and all of that turmoil? How is that shaking out to the current, to the rates and what people are experiencing today?
Yeah, great loaded question. Thanks for putting me on the spot.
Yeah, you bet. I'm good at that. I like to be there.
Yes.
Gives us lots to talk about.
100%. So the commentary around it is home builder stocks and home builder companies. They might be in a little bit of hot water, importing a lot of the materials to build these homes. So there might be some turbulence there. Today, what has it changed? It's affected investors' appetite for bonds and how they're grading them. So that's the trickle down we get on our side is really how do the investors interpret it? What's their appetite for bonds? Then that kind of lets our rate sheet, move, ebb and flow. Right. So have the tariff news directly affected interest rates or mortgage interest rates? No. There is a cloud of people and forces kind of manipulating mortgage rates downstream. So what does it mean moving forward? It's hard to make a decision on that too, or make a statement, I should say, only because we've seen, tariffs started at 104% for China. Well, within a couple of days, they'd already been lowered. And then that changed the market as well. So once they go into place and are stamped final, it'd be easier to make a decision or to give better input on it. Yeah. It's right now it's a moving target to put your thumb on today on May 1st.
Right. It's all talk right now. So it's just like it's like rumors. A barking dog. Yes. Is it going to bite you? I don't know.
Yeah.
Don't maybe we'll
don't
see.
Play with it.
Don't stick in its eyeball.
Yeah.
Right? Like
100%.
Is China the dog that's barking, or are we the dog that's barking?
Yes.
Yes. Okay. We're barking at each other across the fence. Okay. Yes, of course. So, and then just for grins, we can certainly look at, we've got here Mortgage News Daily, which again, just to make a disclaimer about this is not a rate quote from anybody, since Riley is in the mortgage business. This is a national average of data. And again, this is April 30th data, since we're pre-recording this for everybody out there that's watching. So it looks like, why don't you speak to this? This is your world.
This is going to be your national average daily rate sheet, credit score, down payment, property, state, and county, all kind of are levers that will affect this as well. But really what we're seeing is you can see how low rates were. I think this is a 5-year or 10-year zoom out. We had the COVID lows of 2s and 3s, which were awesome. And we've been kind of in a rising rate environment. Over the past 6 months, we're now starting to enter a trending downwards environment.
Which is all the way over here.
All the way over here on the right. Rates are floating around 6.8 today. Yesterday and last week, they were around 6.9. So with all this good news that we mentioned earlier, it's bringing it down. Investors are buying bonds. We're getting action we want to see. There's rumor of someone wanting to fire the Fed chair, and not that that's how it works, but there's rumors and there's a lot of forces wanting to bring these rates down, incentivize consumers to come be homeowners and build wealth for their family. And we get to help in that. It's a really big decision. So arming people with information and data,
100%,
communicating weekly, proactively, are things that we're trying to do.
And communication. I mean, this stuff is for the people that we work with every day, the consumer side, it's really easy for us to speak about some of these topics at a very, very high level because we live and breathe and operate in this space every single day. And there's a ton of jargon. And so when people hear things like the Fed rate and the Fed and the basis points and it's just like, well, because it's easy when you don't live in this world and you see a Google headline or something shared on Facebook in the keyboard warrior sphere that says the Fed drops quarter point. And then there's that automatic correlation that people make in their mind of, well, interest rates, consumer debt rate is going to come down in like succession. That isn't the case.
No.
And Can you just give a quick explanation for the people out there in layman's terms of what that actually means? So the Fed's up here, the bank for banks, essentially up here. How does that get from here, the Fed rate, down to consumer interest rate, 6.8, 6.9, whatever it is for a given day? How does that shake out?
Really, it's a really great.
Kick us out. Okay, here we go. Are we back? Maybe.
It's recording 15 minutes.
Okay. Oh, interesting. I wonder how long that was going on. Hold on. Sorry, folks. 1 second. Technical difficulty happens when you get kicked off the internet. So anyway, the question I had for you was when you see all this talk about the Fed rate, and we live and breathe mortgage, real estate, all of the topics every single day. We can speak the lingo and the jargon, but the consumer out there that's reading headlines and they see up here the Fed has dropped the basis points a quarter percentage, whatever that looks like. And then the misconception in the consumer mind is, well, gee, that means that interest rates on the debt I'm taking, the consumer debt, should be coming down in correlation with that. But we know that's not the case because there's a lot of pieces that funnels through from the Fed down to the consumer level. So can you speak to that, to the people who are watching, what exactly it means when the Fed says that and how it comes to this consumer number at the bottom?
Yeah, it's a really good question. And it comes up often. You'll see the Google headline, Federal Reserve drops interest rates a quarter point. Well, then in turn, usually that week, a couple inquiries come in. Is it time to refinance, or has my pre-approval gone up because rates have gone down? But interest rates, mortgage interest rates specifically, they only go off of how the bonds perform, mortgage bonds. So how they're bought and sold, the investor appetite for bonds is what drives our yields on mortgage rates. The Federal Reserve's interest rate applies to all Fed member banks and what the cost to borrow money overnight is. They have liquidity minimums every night. If they're off by that, they can go to the window, go to the Federal Reserve and borrow the money overnight and pay it back in the morning. So that goes to credit cards and car loans are the two biggest ones that operate off of that Federal Reserve interest rate. So the notion that they cut rates 25 basis points, we'll see rates typically improve on that news, but it's not a direct correlation,
right?
Because investors get excited. The cost to borrow money is going down, though. They're willing to play a little riskier now that my insurance is cheaper on the bank. So that's really the simplest delineation between the two is mortgage rates are off of mortgage bond performance. And then the Fed's interest rate responsible for banks, credit cards, short-term loans.
That makes sense. And I think hopefully that's helpful for people out there. So when they see those headlines, it enables them to have a tool in your toolbox so that when you see those headlines, you'll know how to interpret what that actually means for you as a consumer, which finance is complicated enough, and we navigate it every day in day-to-day life, whether or not we realize it. If you have a credit card, if you are getting an auto loan, like you're navigating
100%.
the finance world. So, okay. So we're here in Michigan right now at UWM. And so very cool experience to see. And I think one of the things that I talk about a lot on this podcast with my clients in social posts, if anybody follows me or watches any of this content, the tens of people out there who are watching, hi, tens of friends, I talk often about how who you work with is so important. And I would argue that more so now than ever, because it's not a home purchase is not a simple transaction. It is not as simple as I've got a guy who's going to open a door, or a gal who's going to open a door for me, and just I'll walk through and we write an offer, handle the paperwork, and it's done. It is way more than that. And a good agent and a good lender will bring so much more to the table. And so, I mean, who you work with matters. And I think that being here at UWM right now is actually speaking to that, adding a layer to that. And I wasn't expecting to actually have that takeaway being here today and this week. So, I mean, what I'm impressed by here is, because you're an independent broker, and you have an account executive. Andrew, why don't you come over and join our conversation if you're so inclined?
Andrew's
a chair back here, just by chance.
Just waiting for you. It's like we planned it. So why don't you introduce yourself and tell folks about who you are and all that jazz.
Sure. Andrew Bartley, I'm account executive here at UWM. Been with UWM for 6 years now, and seen UWM grow drastically over the last few years, especially even in the hardest of markets. And that's really only because of working with mortgage brokers and independent mortgage professionals, because ultimately that saves the consumers a tremendous amount of money.
Mm-hmm.
On average per transaction, it's nearly $11,000.
Yeah.
And that's just by working with an expert like Riley, rather than going to a local bank that you may not provide as good of a service as he can.
Sure.
Nothing against them, but that's what we focus on here, is trying to make sure that the consumer is getting the best treatment, and that's through a mortgage broker.
And often cost and value, people, they think like, oh, those are synonymous. If it's a good cost, then it's a good value. But that's not always the case, because you want to have that value add. You want to feel like not only are you getting a great interest rate that's really competitive, but that savings, and break down for the people what that savings, that $11,000 that you talked about, where does that come from, and what does that actually look like on an average basis?
Sure. So, I mean, that can come from numerous places. And so when we're talking about a mortgage transaction as a whole, if you go to a typical retail bank, they're going to have their set ways of the way that they have to do the process, right? Mm-hmm. They're going to have their normal processing. They're going to have their normal title, all the things that go into getting this loan done, start to finish, the people that are going to make the money along the way. Whereas Riley, or an independent, is going to have access to numerous resources, numerous title options, numerous different lenders out there to maybe fit something that works best. Now, in most cases, UWM is that lender. We handle the majority of loans in the country by a landslide. But Riley still has access to different things that that bank might not have. Even if, we're just talking about UWM. There's countless program types that UWM has that other lenders don't even have an option for. And so Riley has that access and those options. Whereas, if they were stuck into just a one size fits all, then they may miss out on some savings, a grant program, particular loan that allows them to put less money down, or have a lower mortgage insurance premium, right? There's things that Riley will know about, or an independent mortgage expert would know about and be able to do, that you just might not get with a local bank.
Yeah, 100%. And so there was a pretty compelling example that I saw in the session we sat in today that talked about, what they call retail being a bank, or even like a corporate brand of sorts, right? Not just like a US Bank or Bank of America, but a corporate mortgage brand.
This could be, something that flashes at you at every gas station, or harasses you with phone calls at the time. It isn't necessarily a bank that's right there in your local town, but might be something like that.
A big corporate brand.
Yeah.
Something like that.
That shall remain unnamed.
Yeah.
They're not going to space, are they?
Not at all.
No.
No, we're not. We're not. We're not going to go there. So, and the reason we bring this up is because, as an agent, one of the things that we deal with a lot is surprisingly competitive offer situations. I've had several this year where my clients have faced multiple offers, going over ask, things that you want to leverage every single little term and piece that you possibly can to put an offer together that's competitive. And sometimes it's price. Sometimes you have to go over ask, because if your client really likes the house and they have the room to do it, then we might do that. Sometimes it's terms. We don't like to waive inspections, but if you're competing against cash and you're a financed offer that's otherwise solid as a rock, you have to come to you have to figure out solutions that are
Get
going to get
creative.
your offer accepted. And
Yeah.
so finding that we can close quickly. And I think a quick close is a term that I like to work with as much as possible and say, well, gee, yeah, you have a cash offer. That's great. But here's a financed offer that's going to be delivering your money just as quickly.
Yeah.
So being able to, the part that is important of who you work with matters. So when you interview a lender, you're going to want to ask those kind of questions and say, what is your closing? How quickly could you close if we had to do that?
Yeah.
If we needed to do a 14-day close or an 18-day or whatever that looks like
Yeah.
to be competitive. But also appraisals. Appraisals a big component of it too, because that's the last hurdle that one of the last hurdles we really have to hit before
Yeah.
we close. So I mean, what would you add to that whole
Yeah.
piece about strategy and tools and accessibility to options and how that matters to the consumer and what they should talk about when they interview a lender? I mean,
Yeah.
either of you, if you have thoughts.
Well, realistically, there's old school mentality when it comes to trying to get approval on a loan, right? And there's a lot of people that will only go one particular way, and that way may not give you an appraisal waiver. Whereas Riley has the opportunity to run it through a couple different systems. One of which that, without naming names, that Riley has access to, has about a 40% appraisal waiver of all loans last year. Whereas the older system that most people are used to was more like 18 to 20%. So when we talk about appraisals and saving that cost, but then also getting the transaction done faster, going to an independent mortgage expert gives you a bit of an edge and hopefully getting an appraisal waiver. And then also there's other ways Riley's, I'm sure, aware of, to where he can look at a loan and maybe tweak one thing or another that you wouldn't think would impact this, but it does. And that way, having that knowledge and that expertise that he has is going to get you that appraisal waiver more often than not.
Agreed. Agreed. Yeah. The cost of the appraisal has been lower too. I worked in retail, had teams work on big branches, small branches, and you kind of saw about $1,100 across the board for an appraisal. And, we're coming in $200, $300 under on almost all of our files too. So
Awesome.
Going back to the cost savings and the turn times of the appraisal, it's about 5 business days.
Wow.
And that's at the long end. We've been seeing them come in 24
Super fast.
hours, 48 hours.
Yes.
So I think those matter. Speed kills, speed wins.
Yes, absolutely.
Cash offers are still going to take a week and a half to close. And if we can be competitive, it can win. It can be a separating factor.
Absolutely. And that's what folks need. They need to win and feel like they come out not only getting the property they want, but they feel good about it financially. They got the best option, the best cost, the best value for what they were going to do, what they were going to be able to get. And as much as I can as a real estate agent, I want to offer the best value as well. Like not just be worth my weight, worth the salt, right?
Yes.
Essentially that is there. So other than that, this was awesome. Thank you, Andrew, for jumping in and joining us. And any final thoughts? How can the people reach you if they have questions or curiosity about mortgage in the Portland, Oregon metro area?
Yeah, you can call Freestone Mortgage at 888-256-4654. You can email me at randerson@freestonemortgage.com. I'm also on Facebook and Instagram. Would love to connect, answer your questions, equip you with the knowledge and data to make a decision, not to sell you a mortgage, but to help you create a wealth vehicle for your family.
100%. And that's how I see myself as well, is I'm not a salesperson. I'm a financial advisor for your real estate portfolio.
Yes.
Because this is a big investment. Even if it's I don't want to use the word just, even if it's just a primary residence, you live there, your family lives there, it's your stable, secure housing that's for you and your family, that's still an investment. Like you're still gaining appreciation. It's still a value for you.
Yeah.
And it's the single biggest investment for most folks out there. So want to be sure that we approach it that way. And that's, of course.
And so as far as reaching out to Riley, the entire state, not just the immediate area. Keep in mind, he can help you even if you're further out throughout the state of Oregon. Now, if you're not in Oregon or even coming soon, Arizona, then make sure that you take a look at findamortgagebroker.com. So if you're not plugged into a local independent mortgage expert and you're wondering, how do I find this? findamortgagebroker.com. You'll be able to put in your zip
Yeah.
code and search in an area to find somebody that can help you with those savings. So just make sure that you're not missing out on that.
Good call.
Excellent. Well, thank you for that addition. So with that, thank you for watching. And again, subscribe to my channel, Living in Portland Suburbs. Hit the bell to be notified so you don't miss information like this, because I think this is a really insightful episode for folks to understand some of these ins and outs of what's happening in the world today. And tune in next week, Thursdays at noon Pacific time. I'm live, or at least with a pre-recorded live video like today. I'll be on a plane coming back here to 2 weeks in a row on site. So anyway, have a great week. And if you're looking to make a move around the Portland metro suburbs, I'm your local real estate expert, and I would love to connect with you. So below in the comments and in the description, I've got a link to how you can reach out. And otherwise, I will see you next week. Have a good one.